Today, artificial intelligence is transforming our world at a pace few could have imagined just a decade ago. From the way we communicate to the way we work, AI is quietly weaving itself into the fabric of our daily lives, often in ways we don't even notice. This revolution is being driven by the biggest tech companies on the planet, household names that are shaping the future with every breakthrough. These companies are investing billions, not just millions, in research and development, seeing AI as the next great frontier, and racing to control its direction and potential. The impact of this race is felt everywhere, from your workplace and your privacy, to the way you interact with technology at home and in public spaces. The AI boom is generating enormous wealth and opportunity, but it's also creating new risks, as a handful of companies gain unprecedented influence over our digital lives and the global economy. AI is rapidly reshaping entire industries, from how we search for information online, to how doctors diagnose diseases, to how factories operate and products are made. Understanding this massive shift is crucial, not just for tech insiders, but for anyone who wants to thrive in a world where AI is everywhere. To stay ahead, companies are pouring resources into building vast data centers, developing powerful computer chips, and hiring the brightest minds in the field. This has sparked an intense competition, an AI arms race, where every advantage counts and the stakes couldn't be higher. The company that comes out on top could hold extraordinary power, influencing not just technology, but the very structure of the global economy. In this series, we'll explore the companies leading the charge, the innovations they're unveiling, and the challenges they face as they push the boundaries of what's possible. We'll also dive into the looming issue of the AI data wall, where the hunger for new information could outpace what's available, forcing the industry to rethink its approach. And finally, we'll share practical tips and insights to help you navigate this rapidly changing landscape. Whether you're a professional, a student, or simply curious about the future, stay tuned as we uncover the story of how AI is shaping the world around us, and what it means for you, your family, and generations to come. The stock market today is dominated by a powerful group known as the Magnificent Seven: Amazon, Microsoft, Alphabet, Meta, Apple, Tesla, and Nvidia. These companies are not just tech giants, they are the driving force behind the digital economy, shaping the way we live, work, and connect with each other. Locked in a fierce competition to lead the next era of technology, these giants are pouring billions into artificial intelligence, determined to outpace each other and set the standard for the future. In just 1 year, their combined spending on AI is projected to reach a staggering $330 billion, an amount that actually surpasses the annual GDP of many entire countries. This level of investment is unprecedented in the tech world. This massive financial commitment is transforming their businesses from the inside out, fueling innovation and reshaping the global technology landscape at a breathtaking pace. Take Amazon, for example. The company is investing a jaw-dropping $100 billion into its cloud division, Amazon Web Services, which is absolutely essential for powering the next generation of AI applications and services. Microsoft is not far behind, spending $80 billion, much of it going toward its partnership with OpenAI and the development of advanced supercomputers that can handle the demands of cutting-edge AI. Alphabet, the parent company of Google, plans to invest $75 billion to weave AI even deeper into its vast array of products and services, from search to cloud computing. Meta is betting $60 billion on the future of AI and the metaverse, aiming to redefine how we interact in virtual spaces and online communities. Even Apple, known for its cautious approach, is spending over $10 billion to make Siri smarter and more helpful, integrating AI into every device. Tesla is investing $5 billion to push the boundaries of self-driving technology, hoping to revolutionize transportation with AI-powered vehicles. Altogether, global AI spending is expected to soar to $500 billion by 2026, as more companies and countries race to keep up with these tech titans. The Magnificent Seven are betting their futures on AI, convinced that whoever lags behind risks being left out of the next great technological revolution. There's concern about how money moves in the AI industry, creating a closed loop. Companies invest in each other, inflating their value without real growth. This cycle can make companies appear more profitable than they are. For investors, this raises questions about the sustainability of growth. Microsoft, OpenAI, and Nvidia exemplify this cycle. Microsoft invests in OpenAI, which pays Microsoft for cloud services. This boosts Microsoft's cloud revenue and stock price. Microsoft buys chips from NVIDIA, boosting NVIDIA's revenue. NVIDIA invests in AI startups, which buy more NVIDIA chips. This self-feeding system inflates growth on paper. The cycle raises concerns about the true financial health of these tech giants. Let's examine the circular money flow with Microsoft, OpenAI, and NVIDIA. Microsoft invests $10 billion in OpenAI, gaining access to cutting-edge AI. OpenAI uses Microsoft's Azure cloud, returning investment as revenue. This boosts Microsoft's Azure growth, pleasing investors. NVIDIA supplies chips for Microsoft's data centers, boosting its revenue. NVIDIA's stock has soared due to high chip demand. NVIDIA invests in AI startups, creating a feedback loop. Microsoft invests in OpenAI. OpenAI pays Microsoft. Microsoft buys NVIDIA chips. NVIDIA invests in startups, which buy more NVIDIA chips. Each company reports impressive growth, but money circulates within a few pockets. This cycle raises questions about the sustainability of reported growth. The financial health of these companies may not be as strong as it appears. A looming problem for AI is the potential data wall. AI models learn from vast amounts of internet data, but what happens when it runs out? By 2027, AI may have consumed all high-quality internet data. This could slow AI's rapid improvement, stalling industry progress. Investors expect continuous growth, but a data wall could collapse those expectations. Solutions include synthetic data or AI learning from real-world interactions. Synthetic data risks AIs learning from each other's mistakes. Real-world learning is challenging, but may bypass the data wall. The AI industry's future depends on overcoming this data limitation. The data wall is a critical challenge for sustaining AI's growth. Is the AI boom a bubble like the dot-com era? The question is on everyone's mind as tech stocks soar and headlines tout the next big thing. Are we witnessing history repeat itself, or is this a fundamentally different moment? In the 1990s, investors poured money into internet startups without clear business plans. Hype and excitement drove valuations sky high, even for companies with little more than a website and a dream. The dot-com bubble burst, causing massive financial losses. Fortunes evaporated overnight, and many companies vanished as quickly as they appeared. Today, AI companies face similar speculative mania and inflated valuations. Investors are betting big on artificial intelligence, sometimes without fully understanding the technology or its limitations. OpenAI, valued at billions, reportedly loses money monthly. Despite impressive breakthroughs, profitability remains elusive for many leading AI firms. The circular money flow between tech giants is a red flag. Companies invest in each other, inflating values and creating a risky feedback loop. Geopolitical competition adds fuel to the fire. Nations are racing to dominate AI, pushing companies to grow faster and take bigger risks. The AI data wall could burst the bubble if progress stalls. If technical challenges prove harder than expected, investor confidence could quickly evaporate. The parallels to the dot-com era are a serious warning. Both periods are marked by optimism, rapid growth, and a tendency to overlook risks. Investors should be cautious of overvaluation and speculative hype. It's easy to get swept up in the excitement, but history shows the dangers of ignoring fundamentals. The AI boom may not be a perfect comparison, but risks are real. While the technology is transformative, not every company will survive the coming shakeout. A market correction could occur if growth expectations aren't met. Investors should prepare for volatility and remember that hype can quickly turn to panic. The situation requires careful consideration of potential risks. As with any boom, it's crucial to separate genuine innovation from speculation and to invest with eyes wide open. While there are warning signs, today's AI boom differs from the dot-com bubble. Leading tech companies have real, profitable products. Microsoft, Google, and Amazon are established giants with diverse business models. Their AI investments are built on existing success. Unlike dot-com startups, AI leaders have clear paths to profitability. AI is integrated into profitable products, like Microsoft's Office and Google's search engine. AI is delivering real value, changing industries and daily life. ChatGPT is widely used, proving AI's utility. The risk lies in overvaluation, not fraudulent companies. The excitement may have inflated stock prices too quickly. A market correction could occur, but the technology is solid. The AI boom is more complex than the dot-com era. Investors should focus on sound financial planning and long-term strategies. With AI booms and potential bubbles, how should you invest? Keep investing consistently, regardless of market conditions. Timing the market is nearly impossible. Set up automatic monthly investments. Invest in broad, low-cost index funds for diversification. An S&P 500 index fund offers exposure to the largest U.S. companies. Diversification reduces risk by spreading investments across assets. Include stocks, bonds, real estate, and even cryptocurrency. Diversification balances poor-performing assets with strong ones. Increase your income to save and invest more. Seek promotions, learn new skills, or start a side hustle. More money to invest is powerful during market downturns. Buy shares at lower prices for significant gains when markets recover. Simple, consistent strategies are key to financial success. Stay informed and disciplined to navigate the AI-driven market. We are at a critical moment in history with AI's rise. The AI boom offers incredible opportunities, but also significant risks. Tech giants are in an arms race, driving rapid innovation. AI is delivering real products, transforming industries. Investors see enormous wealth potential, but risks are real. Speculative bubbles and inflated valuations are concerns. The AI data wall threatens continued progress. A slowdown could lead to a market correction like the dot-com crash. Approach this new world with a balanced perspective. Be cautious but not paralyzed by fear. Focus on proven investment strategies, regular investing, diversification, and income growth. The AI boom may or may not be a bubble, but sound financial planning remains key. Stay informed, patient, and disciplined to seize opportunities in this AI-driven age.